The use of professional money and risk management is your foundation to financial success. Why? Money management will tell you how many shares to buy. It's the most crucial decision a trader or investor faces. It determines your risk and profit. It's a defensive concept that keeps you in the game to play another day. Risk management will limit your losses and protect your profits by using a stop loss and trailing stop. Some may prefer to use a technical stop. Welcome. My name is Joseph Barrington-Lew, and after a dozen years helping novice and experienced traders and investors, I've found that this knowledge, or lack of it, being the major reason why most lose money.
Hello everyone. Wish I could be there one computer to another to answer any questions, but here goes. Please pause on our disclaimer before you continue. Interesting quotes: plan your trade or trade your plan. Fail to plan and plan to fail. Cut your losses fast and let your profits run. What's it all mean? How often do you need to be right to be successful in the market? 70%? 80%? Even 90%? In fact, many will be surprised to know that some of the best traders in the world only get about 50% of their trades right. The difference being is they know their trade expectancy and close that trade first opportunity when the evidence indicates they have it wrong with a stop loss. And when in profit, get out when the evidence indicates a trend reversal with a trailing stop. But first, there are three questions you must be able to answer. When you are right, how much money on average do you make? What percentage of times do you lose or break even? And how much money on average do you lose when wrong? Successful traders control their risk and follow a proven trading plan that gives them a positive trade expectancy. Cut your losses fast and let your winners run. Now, what is trade expectancy? Knowing your trade expectancy, average winning trades percentage times the average dollar win. You subtract the average losing trade percentage times the average loss. Now, can you make money from a trading plan that is only right 40% of the time? Example, with $30,000 worth of trading capital, you set your limitation to $6,000 trade size at a maximum of 2% risk. So that's 40%, making $1,800, subtracting 60% of losses by $600. That's 720 minus 360. Yes, that's a positive trade expectancy. $360. Now, total trade expectancy is more important than the times you are right or wrong. Now, sometimes you'll win, sometimes you'll lose. Next trade, don't make it personal. Now, the basic components of a trading plan, what to buy and when, which I'm not going to cover today, there's far too many people doing that now, but it's far less important than how many shares to trade, initial stop loss, and trailing profit stop, known as risk management. Now, how many shares to trade? Money management, also known as position sizing, or knowing how many shares to trade, will affect your overall profit and loss or your risk. It is the single most important strategy of any trading system or plan. Now, risk management does not answer the question how many. Example, if you buy a stock at $10 and you have a stop loss at $9, for example, your risk is $1 per share. But what is your total dollar value at risk? 1,000 shares by $1 is $1,000 at risk, versus 100 shares at $1, which is $100 risk. Now, position sizing equals the account size, or the core trading capital, which I'll cover shortly, multiplied by your maximum percentage risk, minus your brokerage times 2, all divided by the buy price minus your stop loss. Now, example, $25,000 trading capital by 2%, minus $20 divided by $1 equals 480 shares. The trade size of 480 shares times $10 equals $4,800 with a $500 at risk. Now, risk management, stop loss and profit stop, is vital to trading success, but position sizing is the missing key to successful risk management. JBL Risk Manager will help you determine your optimum share quantity. Now, core trading capital, or what to bank on is basically your current cash plus or minus your overall funds if all open trades were closed at their current stops. Now let's compare a maximum risk of 2% versus 4%, for example, to help. Now here you may be able to see that with 20 losing trades, you're left with 66%. Now watch that drawdown. What's yours currently? Now after 10 losing trades at 2%, we've lost 18.29% and we'll need 22.4% to recover. After 4% of 10 losing trades, we have lost 33.52% and we'll need 50% to recover. The risk tolerance calculator is included in the JBL Risk Manager, as you can see above. Now, what would your portfolio performance be with either a 2 or 4% win each day, month, or year? Here you can see 12 winning trades, whether it be daily, weekly or monthly. At a 2% growth, that's a figure of 26.82%. But doing the same thing with a 4% growth, you're up to 60%. Now, at risk management, your initial stop loss exit price, or where you close that trade, first opportunity when it is hit, either volatility based, technical or percentage based, and will limit or control your losses. JBL Risk Manager will suggest an initial stop loss, but this can be replaced with your own, and the program will accordingly adjust the recommended share quantity appropriately. Your trailing stop, also risk management. This is your exit price when in profit, which is basically at or greater than your break-even price. It can also be volatility, technical or percentage based. Used correctly will help protect your profits. JBL Risk Manager uses both a volatility-based trailing stop and a percentage-based trailing stop, whichever is the closest to the last closing price. But again, can be replaced with your own price. Now, be aware, closing a position in profit too early, based only on gut feel or fear of loss, will badly affect your trade experience. Now, I want to thank you very much for your time and wish you good trading. Now, the good news is, as I said, all these numbers will be done for you in JBL Risk Manager. I encourage you to download a free trial. It will cover your trade sizing and recommended share quantity, all performance calculations including your trade expectancy, your initial and trailing stop recommendations, your trade journal to record both your long and short trades, sector risk monitoring and risk control, avoiding overtrading, and brokerage and percentage risk settings, and much more. If you have any questions, please contact me direct at joseph@jblriskmanager.com.